Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Last video I have started unit number 2 in financial institutions and markets subject. In second unit, we are dealing with financial institutions. Last video I have explained you the meaning of the term financial institutions. What are the functions of financial institutions and what are the features? These three topics I have covered in the last video. In this video, I am going to explain you about commercial banks. What are the functions of commercial banks and what are the different types of commercial banks? So if you have not watched the first video, go to the playlist of my channel, select the subject financial institutions and markets. Watch the first video. Be clear about the meaning of the term financial institutions. Then you can be able to understand this video more clearly. So before starting the explanation of commercial banks, take the screenshot of the points which I have written on the board, then I'll explain all the points in detail. Now, among the different banks operating in India, the largest network of banks are the commercial banks. So, among the different types of banks operating, the largest network of bank catering to the majority of population are the commercial banks. The complete banking system, if we analyze, so majority of banks are these commercial banks only, and these commercial banks are catering the needs of banking system to the majority of population. And commercial banks are financial institutions which accept deposits from the general public and gives loan for various purposes. The main function of this commercial bank is the commercial bank will accept the deposits from the people and give loans to the needy people who needs money for different productive purposes. So accepting deposits from the people and lending of loans for productive purpose. That is the main function of commercial bank. They also provide a number of additional services for the convenience of account holders for a price. Nowadays, due to the number of changes taking place in the economy, more and more services. Traditional functions are accepting deposits and lending of loans. But modern commercial banks will perform a number of other functions. That means providing a number of services to the customers for a price. They will not give the service freely. The commercial banks will charge some price. Then commercial banks are also called common man's bank. Why these commercial banks are called common man's? Because every person nowadays has to conduct bank transactions. So every common person, every ordinary person must have a bank account with the commercial bank. So that is the reason why the commercial banks are also called as common man's bank. Now, commercial banks offer a number of services for a price with the basic objective of earning profit. Commercial banks are commercial organizations. They are not simply to provide the service, but they also have to earn the profit. So in order to earn the profit, they are accepting deposits from the public and giving the loans to the needy people at an interest. And apart from that, the commercial banks will also provide a number of services to its account holders and charge some price. These banks accept deposits for which the rate of interest is paid is low and provide loans for which the rate of interest charged is high. The main income and expenditure of a commercial bank is the interest. The banker will accept deposits, the commercial bank will accept the deposits from the public for which a lower rate of interest is paid. The same amount is given by the commercial bank to the needy people in the form of loans on which a higher rate of interest is charged. In this way, the bank is charging higher rate of interest on loans and pays a lower rate of interest to the deposit holders. In this way, the bank will earn an income or profit. This helps these banks in earning profit. So commercial banks in India are regulated by the Banking Regulation Act. So every bank in India is governed by Banking Regulation Act 1949. So in India, an act is passed in the parliament called Banking Regulation Act in 1949. And all the banks are governed by this Banking Regulation Act. Every bank has to follow the provisions contained in Banking Regulation Act 1949. Now, so far I have explained you about commercial banks. Now I am going to explain you about the types of commercial banks. Now broadly, we divide the commercial banks into three categories: public sector banks, private sector banks, and foreign banks. All are commercial banks, but the nature is different. So first of all, public sector banks. These are those banks where majority of shares of the bank is held by the government. The government is holding a majority of share capital of the bank, normally more than 50%. For example, XYZ is a commercial bank. In this bank, more than 50% of the share capital of XYZ bank is held by the government. Then the bank will be called as public sector banks. And sometimes a bank is in private sector, but later on the government will undertake that bank. That is called nationalization. So originally the bank was in private sector, but later on the government will procure it, will acquire it, undertake it. That is called nationalization. So the process of converting private sector bank into public sector bank is called nationalization. And this had happened in India. Many banks were started in private sector, but later the government has captured, undertook it. That is called nationalization. In India, bank nationalization was first implemented when Imperial Bank of India in 1955. Actually, Imperial Bank of India was a private sector bank, and that bank was first nationalized in 1955 by the government, and it has changed the name from Imperial Bank of India to State Bank of India, SBI. So after the massive mergers, the total number of public sector banks, PSB, in India has come down from 27 banks in 2017 to 12 banks in 2021. So actually in most of the textbooks it is given that there are 14 banks were nationalized in 1969 and 6 more banks were nationalized in 1980. These are the information provided in many textbooks. But later on, during last few years, the government has implemented merger schemes in which many banks were merged together. So actually up to 2017, nearly 27 banks are there which are nationalized, which are in public sector. But due to massive mergers in 2017, the number of public sector banks has come down to 12 right now. In 2021, now it is 12 public sector banks. Now second one is private sector banks. The private sector commercial banks are those banks wherein majority of shares are held by private individuals. Suppose if the majority of share capital of a bank is held by private individuals, private people. The bank is said to be in private sector bank. So now private sector banks are also governed by the rules and regulations. You should not think that private sector banks are outside the ambit of law. No, all the banks, whether public sector or private sector, are governed by the Banking Regulation Act 1949. Then the only difference is public sector banks are owned by government, whereas private sector banks are owned by private individuals. That is the only difference. Now, at present, 21 private sector banks are operating in India. 21 private sector banks. The last one is foreign banks. A bank whose headquarter is in any foreign country and they are having the branches in India, that is called foreign bank. Simple example, Citibank. Citibank is a foreign bank in India because the headquarter of Citibank is located in New York and it is having branches in different countries, even in India. Even in India, we have 45 branches of Citibank because the headquarter was in another foreign country. It's having branch in India. So this type of banks are called foreign banks. So a bank which has its headquarters located in a foreign country is called foreign bank. It has its headquarters in one country and its branches spread across the number of countries around the world. So nowadays, due to globalization, many banks have been spread throughout the world. The headquarters will be located in a particular country, but the branches are spread throughout the world. These banks are called foreign banks. Example I have given here, Citibank. Actually, its headquarters is in New York and more than 2,500 branches across in 19 countries, including 45 branches, Citibank branches in India. So what I have explained, first of all, what do we mean by commercial bank? Secondly, what are the different types of commercial bank, public sector, private sector, and foreign banks? Now I am coming to the main question. Very frequently in examination, they will ask you, what are the functions of commercial banks? Very important question. So watch the video with full concentration now. Functions of commercial bank. The role and importance of commercial banks in Indian economy can be understood from the functions performed by them. By understanding what are the functions performed by commercial banks, we can understand the role, the importance of commercial bank in the Indian economy. In any country, the economy, the importance of commercial banks can be understood by seeing what the functions it performs. So in India, the functions can be broadly classified into two categories: primary functions and secondary functions. So all the functions of commercial banks are divided into primary, secondary. First, we'll discuss about primary functions. The primary functions are accepting deposits, lending of loans, advancing of loans, and credit creation. These three functions are called the primary functions of commercial banks. So the first primary function is accepting deposits. The commercial bank will accept deposits from the public in different forms. The people will not keep cash with themselves because it is unsafe to keep the cash with themselves. So what the people will do, the people will deposit the cash in the bank. The bank will accept the deposits from the people. But how the bank will accept the deposits? The banker has given different options to the people to open the account. So in this way, we have different types of deposits or different types of accounts. The first one is fixed deposit or term deposit or time deposit. This is the first type of deposit which the banker will accept from the people. Fixed deposit means the deposit is accepted for a fixed period of time. That means the depositor can withdraw the money only on the maturity of the time period. Example, a person has rupees 50,000 excess savings. He wants to deposit this money for a period of 2 years or 5 years, because he see that I don't require this much of money on hand. I can keep it safe for a period of 5 years or for a period of 3 years. So he will approach the banker and deposit that 50,000 for 5 years. So the banker will say, you cannot withdraw the money before 5 years. You can withdraw the money only after 5 years. This is the fixed deposit taken by the bank from the deposit holder. The rate of interest allowed on this fixed deposit will be higher, because the banker is sure that this depositor holder will not come to the bank to withdraw the money for a period of 5 years. So the bank can extend this loan to another person for a long period of time, charging a high rate of interest. So in this way, it's a gain to the business. So normally higher rate of interest will be allowed on fixed deposit or time deposit. But nowadays, some clauses in the agreement is being made that the person can be able to withdraw before due date for maturity, provided some penalty charges has to be paid. If the fixed deposit holder wants to prematurely withdraw the money, then the clause will be there in the agreement that he can do it, provided he has to pay some penalty. Like that is the first type of deposit. The second type of deposit is saving deposit. Most common form of deposit is the saving deposit. In this case, the excess money what a person is having, they can keep it safe with the commercial bank. The commercial bank can accept the savings in the saving bank account. In this case, the person can withdraw the money and deposit the money any number of times. The banker will not give any restrictions on withdrawal the money, or some restrictions will be there, like weekly 2-3 times they can make the withdrawal, not more than 3 times, not more than 5 times. If the person withdraw the money more than 5 times, some charges will be applied. Like that, small restrictions will be applied on saving bank deposits. So normal people, for banking transactions, every common person will open saving bank account to keep their money safe and to conduct the banking transactions. Third one is demand deposits or current account. In this form of deposit, the depositor will deposit the money with the bank and withdraw the money frequently. So normally the business people will open these demand deposits, because the business people have to pay the amount frequently. They have to pay to the suppliers or different parties very frequently. Every day so many times checks has to be issued. Every day so many checks are received. So when the transactions with the bank are more, the business people will open these demand deposits. No restrictions are applied, just like saving bank. In saving deposits, some restrictions are applied by the banker, that the depositor can withdraw only so many times in a week. Those restrictions are not there in current deposit. Normally no interest is applied. A small rate of interest will be given on saving deposit, but no interest will be given on the current account or demand deposits. Apart from that, the business will charge some fees also when the businessman has withdrawn the money more frequently. So these are the 3 types of accepting the deposits. That is the first primary function. The second primary function is advancing of loans. Once the deposits are accepted, the banker will not keep the money idle. If the money is kept idle, how the banker can be able to pay the interest to deposit holders? So the banker has to utilize the money, earn some interest, and from that interest they have to pay the deposit holders. So how the money will be lended? That is called advancing of loans. Just like we have different types of deposits, similarly we have different types of loans given by the bank. The bank will extend the loan in different forms. What are the different forms? First, term loan. The banker will give the term loan for a period of time. That means a person approaches the banker to give a term loan for 5 years of rupees 1 lakh. The banker will say, okay, we will give you term loan of 1 lakh rupees for 5 years. You can repay the amount of 5 years, repay the amount of 1 lakh rupees after 5 years, or you can repay in installment. But the period of repayment is 5 years. Example I am giving. 3 years, it may be 4 years or 5 years or 10 years. This is called term loan. The rate of interest charged will be high. Now, second is call loans. These are the short-term loans which normally will be given by the banker to the borrower for a short period of time, just like 15 days. Normally these call loans or call money will be used by interbank, whereas one bank will give the loan to another bank for a short period of time, just like for 15 days or 10 days, like that. This is also one of the method of extending the loan. Third is cash credit. In this cash credit, the amount given as loan will not be given the whole loan amount on the counter. For example, if a person needs 80,000 loan, he approached the banker. The banker is ready to give the loan provided this loan amount of 80,000 will be credited in his account. In his account, the borrower's account is opened. In that borrower's account, 80,000 will be credited by the banker. Now, a checkbook will be given to the borrower. Whenever the borrower have to pay to someone else, he will issue the check and the banker will debit the amount. So, the whole loan amount will be not given across the counter, but the loan amount is credited in the account of the borrower, and the borrower can withdraw the money as and when it is needed. The whole amount will not be withdrawn. Whenever he requires, he will withdraw that amount. But the interest will be charged on the whole 80,000 rupees. Next is overdraft facility. The overdraft facility will normally be given by the banker on current account holders. The facility will be given to the current account holder that he can overdraw from his account. For example, a current account holder, I am the current account holder in a bank. In my current account, only 50,000 rupees is lying, but I have to pay 60,000 rupees to one of my supplier. I cannot give 60,000 because in account I am having only 50,000. I will approach the bank manager and request the banker that I am issuing 60,000 rupees of, I am issuing a check of 60,000 rupees. Please honor it. The banker will take some security and provide and pay that 60,000 rupees. He is having only 50,000, but he has issued the check for 60,000. The 10,000 rupees excess the bank pays is called overdraft. So then overdraft is a temporary loan. In the next few days, after few days, the customer, the businessman has to repay that overdraft to the banker, and the banker will charge interest on this overdraft. Next comes discounting of bill of exchange. Normally, a bill of exchange is an instrument where one person, the seller, will draw a bill on the buyer for a time period. For example, A is the seller, B is the buyer, customer. So after selling the goods to B, A has drawn a bill of exchange on B, and B accepted that bill. that B says I will pay the amount on the bill after 3 months. After accepting the bill, B will return the bill back to A. Now A is having the bill. He has to keep the bill of exchange for 3 months. After 3 months, A will present the bill to the customer B. B will make the payment. That is the procedure of bill of exchange. But sometimes the holder of the bill is in need of money. Suppose I am A. I got the bill of exchange from you. You want to pay after 3 months. You have accepted the bill. I am having the bill. But immediately I want immediate cash. The value of the bill is 50,000. I will go to the bank and ask that this is a 50,000 bill and you will get the amount after 3 months, but I need immediate money. The banker will say, oh, okay, we will pay you 48,000. 48,000. The bill amount is 50,000, but I am getting only 48,000 from the bank. 2,000 rupees are the income for the banker, that is discounting charges, right? That is also one of the method of giving the loan. Then last one, letter of credit. Actually, letter of credit is not a method of giving the loan, but giving a guarantee. The banker will provide a guarantee on behalf of the customer that if the customer does not pay the amount, then we guarantee that we will make the payment. So in this way, a secondary liability will arise on the part of the bank. If the customer fails to make the payment, the banker has to make the payment. That's also one of the method of advancing. So primary functions, first primary functions, accepting deposits, second way, advancing of loans. Third is credit creation. While making this accepting deposits and lending loans, the banker will create the credit. Money creation will be made by the banker. How? Simple example. Suppose the bank has accepted a deposit from a customer. The bank has to lend this money to the borrower. The borrower says, I need 1 lakh rupees loan, but immediately I don't want it. So the banker will open an account. In his account, 1 lakh rupees will be created. As and when he requires, he will withdraw the money, right? So in this case, the 1 lakh rupees loan given will become an asset. Will become an asset to the banker. Apart from that, a liability. Because the person have to pay the money. So at the same time, an asset and a liability will arise. The banker has not given the entire loan amount. The banker has credited the loan amount in his account. He will withdraw whenever he likes. So a deposit has been created. Like that, so many deposits when created, it leads to creation of credit, creation of money. So this is also one of the primary function of commercial bank. Now secondary function. Now I am coming to the second part, last one. Secondary functions are different functions like agency functions. The banker will act as an agent on behalf of the customer. That means whatever the functions of customer are there, the banker will perform. Example, collection of checks. The customers have to collect the checks, but this responsibility has been given to the banker. The banker will collect the checks on behalf of the customer. The banker will charge some commission. Secondly, collection of income. Sometimes a customer has to collect the income from different sources. So instead of collecting himself, the responsibility has been given to the banker. The banker will collect the rent or interest or dividend and deposit that amount in the account of customer. Again, the banker will charge some commission. Thirdly, making payments. Nowadays, a number of payments has to be made by the customer. So instead of doing customer himself or herself, the responsibility is given to the banker. Now the banker will make the payments on behalf of the customers. Again, the banker will charge some fees from the customer. So these are called agency function. Similarly, general utility functions. These functions are provided by the banker to everyone. Transfer of funds. Now, the first general utility function is transfer of funds. These commercial banks will help the customer in transferring the funds from one place to another place through demand draft, DD. or telegraphic transfer like that. Second, foreign exchange facility. Nowadays, many commercial banks are giving the facility to the customer for converting the foreign currency. The foreign currency can be converted into home currency or home currency into foreign currency with the help of commercial banks. Locker facility. Many commercial banks are providing locker facility to the customers. The customer, by paying nominal rent to the commercial bank, they can hire the locker, and in the locker they can keep their valuables. Next one is issuing traveler's check. If a person is traveling to outside country, foreign country, he can take traveler's checks from the banks. And plastic money. Nowadays, debit card, credit card, all these plastic cards will be issued by the banker to the customers. With the help of these cards, we can be able to make the payments. These are the general utility functions. Lastly, other services provided by commercial banks, like it can also act as a trustee or executor for property and will of the customer. Many customers will execute the property, or according to will, the property is to be settled by the banker. Then banks provide consultancy services to their customers and investment, tax saving, financial planning, etc. Because the bank is in fully conversant with the financial system, the bank will help the customer in their tax planning, in their investment policies, like that. Then some commercial banks also publish journals which provide statistical information. Nowadays, a lot of information is required by the people. So these commercial banks will make journals and provide to the people so that the people can get the information about the financial system. So in this video, I have explained you about the meaning of the term commercial banks, what are the different types of commercial banks, and what are the functions of the commercial banks. This video is very, very important for all the graduation students as well as post-graduation students. Very frequently in examination, the question will be asked on commercial banks. So inshallah, we'll continue the next topic in the next video.